All right, a quick look at BRKL. You can see a nice run up here to 1930, big drop all the way down to 1280. That's a, what, 30 something percent loss. But you can see this low here at 1460 correlates to that low on the RSI. It continues to drop further, but the RSI was actually stronger. So you have a lower stock price, but a stronger stock. That was a good thing. That's probably where a lot of swing traders picked up the stock because it showed more strength. Um, so you have something like that on the RSI. This is clearly wave 1, and that's 2. We're in the process of making 3. So it's going to look maybe something like that. The question is, where's 3, where's 4, where's 5? If we just take our extension tool and map something like this out, these are now our lines of resistance. So a perfect one-to-one extension would be 1558. That's probably an ideal place to think that we're heading to. So it'd be something like this maybe, right? Um, you can see the Stochastic RSI here is trying to curl back up. You really don't want it to fall below here, which is what it's doing now. It's kind of stopping at that previous low. We don't want to make a lower low on the Stochastic RSI. That would mean we're weaker. But if it can curl back up here, that'd be a good thing. You can see here on the regular strength index, we have this high, and it got rejected again. So this is curling back up. We really want to see it push above here. We want it to get stronger. We want the stock to get stronger. The good thing about this is that we had a low here and a higher low here. That's a good thing. Um, let's see, what else can we see here? A perfect one-to-one extension here would actually correlate to this high here. So we have that, right? So rejected, rejected, we could see it rejected again here. That's kind of it makes sense that it had trouble here, it had trouble here. It's probably going to have trouble here again. So 1558 seems like a decent target. Each candle is going to represent 1 day here on this chart. It's a 1 day chart. So this structure here represents about like 2.5 weeks of data. The February 15th calls is going to give us another 3 weeks to finish out something like this. 1470, 1468 is a crucial mark here. So rejected, rejected, you don't want to see it get rejected here. We want to see it push past this mark, make a higher high. We want to see the strength index push past this mark, make a higher high. If we get to this 1520 range, I would probably think about selling the call options. So right here, right? Or maybe even right here. Worst case scenario is that we finish wave 3 up here, we hit wave 4, and for whatever reason, the fuck is this? For whatever reason, the 5th wave doesn't get past this high. So we 3, 4, 5. That ends the 5th wave structure, and then all of a sudden we're hitting some type of correction down here again, and then you would fuck up your calls. So I think, at least, if you want to be a little conservative, once we get into this range here, past 1520, into this 1530, 40 range, I would probably sell the call. You'd be up already like 1 or 200% on the calls anyways. If there's some type of extraordinary earnings, you can maybe push past here and look at this 1670 target. This 1850 target's highly unlikely, but it just makes too much sense looking at this one-to-one extension that it got a lot of trouble here, a lot of trouble here, probably a lot of trouble here too. So I would just look at this 1468 range, and if we push past it, that's a really good sign. If you can look at this RSI and we get above this marker here, that's also a really good sign. But I would go ahead and buy the $15 call options for February 15.